Thank you for checking out the municipal market update for the week of April 5th, 2021. My name is Adam Bauer, and I serve as CEO and president of Fieldman Rolapp Associates. Fieldman Rolapp Associates is a municipal advisor to government. 2 times a month, we provide a municipal market update. Typically, we provide the update on the first and third Mondays of each month. On our first slide, what we're showing is the municipal market data yield curve from years 1 through 30. And that red line represents that data as of 4/2/2021. So the MMD has 30 data points, one for each year, and that's what we're showing there, starting at 0.09 and going up to 1.73. But you're also probably noticing gray bars in that chart. And those gray bars, what they represent is the range that the MMD has had for each one of those maturities when you go back to 2005. So if you look at year 1, you can see currently we're at 0.09, but it's been as high as almost 4%. And so obviously we're at very historical lows on that 1 year. But hopefully what you're also noticing about that red line is on the 1 year and 2 year, we're at near absolute lows. But even when you go out to year 30, we're still at the bottom tier of those gray bars, and that represents those maturities have very low rates, but in historic standards, not quite as low as like years 1 and 2 on here. So the yield curve has dropped on the front end, but not as much on the long end, and we still have historic lows. But from a historic perspective, the shorter term maturities are at almost absolute lows going back to 2005. Now, what we've done here is taken that same MMD curve and compared it to 2 other data points in time. So if you look at the red line, that represents 5 years ago. And I've talked to you a lot about how flat the yield curve has been in 2020. Well, 5 years ago in 2016, it wasn't that flat. That's the more typical type yield curve you'd see. But go to the black line, which is 1 year ago, and that's right after we all recognized we had the pandemic. And there you can see the 1 year is elevated there at between 1 and 1.5, and then goes up from there, but it's a lot flatter than both the green and the red line. So now getting the green line, that's 2021 and where we're at right now in early April. And you can see there where rates are very low in the front end, and then they start to increase, and then they start tapering off when you go to year 10. But looks a lot more like that 5-year mark in 2016 than we've seen recently. So our yield curve is steeper than it's been in the most recent months or time. Now, when we're looking at municipal bonds, I've talked to you a lot about supply and demand. And this chart, what it represents is the demand for municipal bonds. This is money flowing in or out of the municipal bond funds. Green bars represent money flowing in. Red bars represent money flowing out. We spent a lot of time talking about during the initial stages of the pandemic, there was kind of the sell everything rally. Municipal bonds were part of that. Money flowed out of the municipal bond funds. And then with the exception of a week or 2 here or there, never enough to really make the monthly data a negative outflow, we've seen constant money flowing into municipal bond funds. So this is our demand for municipal bonds. So you have every month, money continues to flow in with a few exceptions. So how does the supply look? Well, if you compare it to some previous years, and you look at 2019, that's that red line, we certainly are well above that. But you compare it to 2020, that's that blue dotted line, we're a little bit below that. And then finally, you have our green bar, which represents our 2021 average. Now, we probably have a little bit less volume than a lot of folks were expecting. I think there was a consensus that 2021 would have a greater amount of issuance than 2020. The year's still young. We've just gone through the first quarter, so we certainly can see that pace pick up. But so far to date, we've had a very manageable amount of supply. So we've had money flowing in, that's our demand. We have a manageable amount of supply, and that's one reason why you've continued to have pressure on interest rates staying low. On our next chart, what we're showing here is the MMD and the US Treasury, both the 10-year terms, and how they've compared to each other over time. And we recently did actually a municipal market updated to talk a bit about some of the movement we saw in treasuries. That was just before we saw this movement. And what we recognized was we had a significant amount of movement in treasuries, but municipals had not tracked that yet. And then municipals made up for it in a big way. You see that huge spike, but then it's tapered off from there. And a big question for us was, would that continue, or would it stabilize like it has? And I think fortunately for a lot of our issuers, that has been a little bit of a rocky ride there, you can see, but it hasn't continued to track and go up to the same degree the US Treasury has. And like I said, both these are for the 10-year, both for the MMD and for the US Treasury. Finally, on this next slide, we show some of the economic data to continue to watch for. And as I said in the past, almost every time we record this MMU, is that with the COVID environment, comparing data from one quarter or 1 year to the next is very challenging right now. But these are items that investors are typically looking to as significant data points that they monitor. On our last slide here, just want to remind you of our registered municipal advisors. Each one of these individuals is available for any questions that you may have. On behalf of this group, I thank you for your time today, and I look forward to talking with you again in 2 weeks.